Most traders think a large account is the result of better entries, sharper analysis, or faster execution. They imagine a future version of themselves with more tools, more confidence, more aggression. They picture scale as an upgrade in power. What they never imagine is that scale is actually an upgrade in restraint. A small account exposes your mistakes. A large account magnifies them. The mindset required to handle real size is not louder. It is quieter. It is slower. It is less impressed by opportunity and more committed to survival. Traders who dream of big numbers rarely understand that the number itself is not the challenge. The challenge is behaving the same way when the stakes become uncomfortable. Most people cannot do that. When the profit and loss swings grow, the nervous system revolts. It demands action. It demands reassurance. It demands constant participation. And this is where accounts die, not because the strategy fails, but because the trader cannot tolerate the emotional weight of scale. The seven-figure mindset is not about ambition. It is about tolerance. Tolerance for boredom. Tolerance for sitting out. Tolerance for watching moves happen without you and feeling nothing. The trader who survives at higher levels is not chasing excitement. He's protecting psychological balance. The market does not care how badly you want growth. It only responds to behavior, and behavior under pressure reveals the truth. Every undisciplined impulse that costs you money at a small size becomes catastrophic at a large size. The habits you ignore now are rehearsals for future destruction. Most traders are not undercapitalized. They are underdisciplined. They want expansion without transformation. They want the reward without becoming the person capable of holding it. A large account is not built by pushing harder. It is built by removing the behaviors that leak capital, removing impatience, removing revenge, removing the addiction to activity. What remains after removal is consistency, and consistency compounds quietly while emotional traders burn themselves out chasing intensity. The realization almost nobody understands is simple and brutal. The market will only grow you to the level your mind can survive. If your psychology is fragile, your account will stay fragile. If your discipline is unstable, your equity curve will mirror that instability with perfect accuracy. You are not scaling a strategy. You are scaling a personality. And unless that personality is trained to withstand silence, pressure, and restraint, the number you dream about will always stay theoretical. The fantasy of a large account is built on speed. The reality is built on slowness. Most traders approach the market like sprinters trapped in a marathon. They push early, they push often. They believe effort must be visible to be meaningful. They equate activity with commitment. And because of that belief, they exhaust themselves long before consistency has a chance to compound. A seven-figure mindset is allergic to unnecessary movement. It understands that every trade carries psychological weight, not just financial exposure, but emotional residue. The undisciplined trader accumulates residue faster than profit. He stacks decisions without clearing the mind between them. Over time, clarity erodes. And when clarity erodes, size becomes poison. Small mistakes tolerated at low exposure become fatal when multiplied. The trader who cannot follow rules with a modest account is rehearsing collapse at a larger one. Scale does not forgive personality flaws. It amplifies them. The market is not your enemy. Your untrained reactions are. Most traders do not lose because the market is unpredictable. They lose because their behavior is predictable. After a win, they loosen structure. After a loss, they tighten emotionally. They oscillate between arrogance and fear. There is no center. A large account demands a center, a psychological anchor that does not drift with each candle. The trader capable of holding size behaves the same way in silence as he does in volatility. He is not searching for stimulation. He is searching for alignment with rules. Rules are not restrictions. They are insulation. Without insulation, the emotional temperature of trading burns through judgment. You start trading your feelings instead of your plan. You start interpreting the market as a personal message instead of neutral movement. Every tick feels like commentary on your intelligence. This is how traders become fragile. Fragility is expensive. The seven-figure mindset is built on emotional durability, the ability to absorb fluctuation without narrative. Price moves. The trader does not attach meaning beyond structure. He does not romanticize wins. He does not dramatize losses. He records them, studies them, and returns to neutral. Neutral is power. Most traders live far from neutral. They are either chasing recovery or celebrating momentum. Both states distort perception. In distortion, risk expands invisibly. You believe you are making rational decisions while emotion is quietly steering. The market punishes invisible risk first. It does not announce the mistake. It accumulates consequence. A slightly larger position here, a rushed entry there, a rule bent because the setup felt right. Each violation is small enough to justify. Together they build instability. Instability compounds faster than profit. A large account is not destroyed by catastrophe. It is dissolved by tolerated indiscipline. The trader convinces himself that experience has replaced structure. He believes intuition exempts him from rules. He calls deviation adaptation. The market calls it debt, and debt is always collected. The mindset required to grow capital is not impressed by its own success. It treats every gain as fragile, temporary, conditional. It assumes that without continued restraint, reversal is inevitable. This assumption is not pessimism. It is protection. Optimism is dangerous in trading. Expectation is dangerous. The trader who expects continuation trades carelessly. The trader who respects uncertainty trades defensively. Defense is not weakness. Defense is longevity. The goal is not to feel brilliant. The goal is to remain solvent long enough for probability to work. Most traders are too emotional to wait for probability. They need action to feel engaged. They fear stillness because stillness exposes their lack of control. When nothing is happening, the mind invents urgency. It scans for excuses to participate. It manufactures signals out of boredom. This is how accounts bleed slowly, not through dramatic failure, but through constant minor leakage. The trader cannot sit in cash. He cannot tolerate inactivity. He believes he must always be involved. Involvement becomes identity, and identity demands reinforcement. A seven-figure mindset has no identity attached to trades. It does not need to prove intelligence. It does not need to demonstrate courage. It needs only to execute consistently. The ego is removed from the process. What remains is mechanical behavior aligned with rules. Mechanical behavior survives pressure. Emotional behavior seeks relief. The difference between those two impulses defines financial trajectory. The trader seeking relief exits winners early, holds losers too long, and increases size to escape discomfort. The trader seeking alignment exits according to plan, accepts losses as operational cost, and sizes positions to preserve mental clarity. Clarity is capital. Without clarity, money becomes unstable energy. You react instead of decide. You chase instead of wait. You interpret noise as opportunity. Over time, the account begins to reflect internal chaos with brutal accuracy. The market is a mirror. It reflects impatience with drawdown. It reflects arrogance with reversal. It reflects fear with missed opportunity. Every emotional flaw has a price tag attached. The trader who refuses to study himself will pay repeatedly for the same lesson. A large account is evidence of internal order, not brilliance, not luck. Order in routine, order in risk, order in expectation. The trader capable of sustaining growth is not chasing extraordinary trades. He is protecting ordinary behavior. He understands that consistency is built from repetition, not heroics. Heroic trading destroys accounts. It creates dependency on intensity. The trader begins to crave the emotional spike of big wins. Smaller, sustainable gains feel meaningless. He increases risk to feel alive. He mistakes adrenaline for progress. Adrenaline is expensive. It trains the nervous system to reject calm, and calm is where real money is built. The ability to sit in a position without interference, to let structure play out without emotional editing, to resist the urge to micromanage every fluctuation. Most traders cannot do this. They suffocate their trades with attention. They monitor every tick as if observation can control outcome. In reality, attention increases anxiety. Anxiety accelerates decisions. Accelerated decisions degrade quality. The seven-figure mindset is comfortable with distance. It places the trade and steps back mentally. It does not hover. It does not negotiate with the chart. It accepts uncertainty as permanent. The trader is not trying to eliminate discomfort. He is trying to function inside it. Functioning inside discomfort is the profession. Anyone can trade when conditions feel safe. Professionals trade when conditions feel ambiguous. They do not demand emotional certainty. They operate with incomplete information and complete discipline. Discipline is not motivation. It is architecture, a structure built to contain emotion when emotion becomes loud. The trader who relies on feeling strong will fail the moment he feels weak. The trader who relies on structure behaves the same regardless of mood. Mood is irrelevant. The market does not adjust to your psychology. You adjust to its indifference. That adjustment requires humility, the understanding that you are not here to conquer the market. You are here to survive interaction with it. Survival precedes scale. Scale without survival is temporary expansion followed by collapse. Many traders experience rapid growth early. They interpret early success as mastery. They increase risk before increasing discipline. The account grows faster than the mind. The correction is violent because the market does not negotiate with imbalance. It restores proportion. If your behavior cannot support your size, size will be removed. Not out of malice, out of mathematical inevitability. The seven-figure mindset respects inevitability. It assumes error is always possible. It builds buffers. It reduces exposure not because fear is present, but because fragility is always near. This awareness creates caution. Caution extends lifespan. Lifespan creates opportunity. Most traders shorten their lifespan chasing acceleration. They want the result now. They resent gradual growth. They treat patience as punishment instead of strategy. And because of that resentment, they sabotage their own compounding. Compounding is quiet. It does not feel dramatic. It feels repetitive. The same rules followed daily. The same restraint applied daily. The same refusal to overreach daily. Over time, repetition builds weight. But in the moment, it feels small. The undisciplined mind rejects small. It wants spectacle. The professional mind protects small because small is scalable. Small mistakes are repairable. Small gains are repeatable. The trader focused on repeatability builds foundations that can hold size. Without foundation, growth collapses inward. You cannot skip psychological development. You cannot trade your way around emotional weakness. Every unresolved impulse will surface at higher stakes. The market is patient. It will wait until exposure is large enough for the lesson to hurt. Pain is a teacher most traders meet too late. They meet it after arrogance has already expanded risk, after confidence has already outpaced skill, after the account has grown faster than discipline. Pain resets perspective. But the cost of that reset is often catastrophic. The trader who survives learns to respect pain early. He studies small losses as warnings. He treats discomfort as information. He does not numb himself with activity. He slows down. He asks why the impulse exists. He trains the mind to recognize danger before size magnifies it. Recognition is protection. Most traders ignore internal signals. They override hesitation. They call intuition weakness. They force participation to avoid missing out. In doing so, they silence the very mechanism designed to preserve them. A seven-figure mindset listens inward first, not for prediction, for stability. If the mind is restless, exposure is reduced. If emotion is loud, participation is limited. The trader understands that psychological weather affects decision quality. He trades the weather of his mind as carefully as he trades the market. This is not softness, it is precision. Precision requires awareness. Awareness requires honesty. Brutal honesty about limitations, about impulses, about the desire to be right more than the desire to be consistent. Without honesty, growth is theater. Many traders perform discipline. They talk about rules while privately negotiating with them. They present structure ex RNLA while improvising internally. This split identity guarantees failure. You cannot scale a lie. The account will expose it. The market always exposes the truth, not immediately, but inevitably. And when exposure arrives, excuses dissolve. The chart becomes a ledger of behavior. Every deviation recorded. Every emotional trade documented in equity. The trader who studies that ledger without defensiveness evolves. The trader who blames conditions repeats. Evolution in trading is subtraction, removing what weakens you, removing the need to trade constantly, removing the fantasy of control, removing the ego that demands recognition. What remains is a quieter operator. Quiet operators last. They are not chasing headlines. They are not chasing validation. They are executing a craft with respect for its danger. They understand that the market is not conquered once. It is respected daily. Respect is renewable. It must be chosen each session. Chosen when boredom appears. Chosen when confidence swells. Chosen when fear tightens the chest. The choice to follow structure in those moments defines trajectory more than any single trade. A large account is not built in bursts. It is built in decisions that look insignificant at the time. The decision to wait. The decision to reduce size. The decision to stop for the day. Each restraint is invisible progress. Each refusal protects the future. The seven-figure mindset values protection more than expression. It is not trying to express brilliance. It is trying to preserve capability. Capability survives only in disciplined environments. Chaos consumes it. Many talented traders disappear because talent without restraint is alpha racing. Restraint is the rare skill. It cannot be faked. It cannot be borrowed. It must be practiced in moments where breaking it feels justified, especially then. The mind always has reasons to violate rules. It produces convincing arguments under pressure. The professional does not debate with impulse. He defaults to structure. Structure is pre-decided behavior. Decisions made in calm that govern behavior in stress. Without pre-decided boundaries, every moment becomes negotiation. Negotiation under emotion always favors the impulse. Impulse is short-term. Discipline is cumulative. The trader who chooses cumulative behavior outlasts the one chasing moments. Longevity is the hidden advantage. It allows probability to manifest. It allows learning to compound. It allows mistakes to be absorbed without termination. Termination is the fate of the undisciplined. Not because they lack intelligence, because they lack containment. Intelligence without containment accelerates destruction. It finds sophisticated ways to justify risk. It builds narratives around recklessness. The market ignores narratives. It responds to size and behavior only. The seven-figure mindset understands this indifference. It stops telling stories about trades. It stops personalizing outcomes. It measures performance mechanically. Did I follow the rule or not? That is the only question that matters. Profit is secondary. Process is primary. When process is correct, profit is a byproduct. When process is ignored, profit becomes accidental and unsustainable. The trader chasing accidental profit is gambling. The trader protecting process is building infrastructure. Infrastructure carries weight. Weight is what large accounts demand. They demand emotional load-bearing capacity, the ability to watch large swings without identity fracture, without desperation, without celebration. Just observation and execution. Observation without reaction is mastery. Most traders react to everything. Every tick invites interpretation. Every candle invites prediction. They are exhausted by their own involvement. Exhaustion leads to shortcuts. Shortcuts lead to errors. The quiet trader conserves energy. He engages only when structure demands. He is not everywhere. He is precise. Precision reduces fatigue. Reduced fatigue preserves discipline. Preserved discipline sustains growth. This cycle is not glamorous. It is not exciting. It is effective. Effectiveness rarely feels dramatic. It feels controlled. The seven-figure mindset chooses control over stimulation every time. It understands that excitement is a tax on judgment. The more excited you are, the less precise you become. Precision is the real edge. Not speed, not aggression. Precision in entry. Precision in size. Precision in exit. Precision in behavior. This level of care is not obsessive. It is professional. A craft executed with respect for consequence. Consequence is always present. The market does not forgive carelessness. It may delay punishment, but it never cancels it. The trader who internalizes this becomes conservative in the best sense, not fearful. Intentional. Intentional behavior compounds into stability. Stability attracts growth. Growth sustained by stability becomes scale. Scale managed without ego becomes longevity, and longevity is the closest thing to certainty this profession offers.